Hello everyone, welcome back to Capital Cosm. Today we are diving into gold and silver. If you've been keeping an eye on the markets lately, you may have noticed something interesting. Both the gold and silver prices have begun their move to the upside. But why is this happening? Let's dive in and break it down. As you can see here, there's been a noticeable uptrend in gold, well above its Ichimoku cloud, meaning that we have proper resistance here, and only about 1.89% above its moving average, which is not bad, meaning that we have a lot more room to run. And yes, we did hit an all-time high of just over $2,200. We're currently sitting at $2,161. Silver, on the other hand, struggling a bit more than gold, however, but nonetheless making gains. At $25.17 at the moment, we do see a significant rise from the $22 level, and we are above this Ichimoku cloud, indicating that we have some proper support here. The distance from moving average is about 5.5%, which isn't too bad either. Now, let's go ahead and track the mining ETFs relative to the gold price. As you can see here, the XAU to gold price is well below its all-time high, stemming all the way back from the 1990s, 1996 in particular here. We've been in this long-term downtrend despite a rising gold price. The ETFs simply have not caught up. On this chart, you'll notice that the GDX price has effectively gone down over the course of the last decade or so, whereas the gold price has shot up 235%. You'll also notice a similar phenomenon with silver miners relative to the price of silver. Silver has gone up 35% since 2011. However, the miners are actually down 40%. So what exactly is going on? Let's get to the bottom of this. So here we've got institutional ownership of GLD. GLD is the biggest gold ETF that tracks the gold price. And what you'll notice here is you've got this black line here tracking the gold price and these green lines here denoting volume of institutional ownership of things like family offices, hedge funds, etc. And so as the price has gone up, this green space here has remained fairly constant, indicating that a lot of this upside move has come at the behest of retail, meaning it's not really a move from smart money. On the other side, GDX, when you look at GDX, which is your gold miners ETF, you'll notice the price coming down over the last several years, but your institutional ownership being pretty much held steady. Now, the interesting here with GDX is that you saw this big spike up in institutional ownership back when GDX was all the way down here, before its huge momentum rise up to the top. So institutional ownership is a perfect example of smart money getting in before retail. You saw that big green spike up before the huge rise in GDX. On the silver side of things, SLV, the silver ETF that tracks the price of silver, you'll notice that institutional ownership has gone down in silver, pretty much congruent with the price of silver. Silver's been coming down since 2020 just about, and we saw a pretty intense spike up recently. However, this has not come at the hands of institutional money. SIL, the silver miners ETF versus institutional ownership. You'll notice that as the price of SIL goes down, more institutional ownership occurs. Meaning, as retail sells off, institutions are buying these silver miners. So the play here isn't gold or silver. It appears to be the miners. Institutional money is getting into these silver miners more so than retail. Retail appears to be moving the physical metals price, whereas institutional money is leveraging their bets by going along these mining ETFs. Here's a Google Trends search query chart stretching all the way back to 2004. This basically measures the volume of Google search queries relating to gold stocks. And what you'll notice here is we had a huge spike up in March of 2020. and we've pretty much consolidated down. Now, we have had a pretty decent rise up from September of 2023 when we were indexed at 15. We're now indexed at 25. So that's almost a doubling in interest, in retail interest in gold. You'll notice also something similar in silver stock. Silver mining stocks really haven't moved by way of retail interest. And that's what we saw in our institutional ownership chart, right? SIL, the Silver Miners ETF, has gone down, but institutional ownership has gone up, meaning that it's retail that's been selling out of these mining equities. So is it really just retail that's been propping up these precious metals prices? Well, not entirely. Here you've got central banks hoarding gold at the fastest pace in modern time. You've got your blue bars here, which indicate net central bank gold purchases in tons. And then you've got the gold price here in blue, this blue line here. And what you'll notice is the higher your bars are, the more highs you make on this blue line. Meaning that it may not just be retail buying up the physical. It appears that it's central banks, governments. So in summary, guys, there are several factors contributing to the recent upward movement in gold and silver prices. From technical analysis signaling a shift in sentiment to institutional ownership remaining steady and central banks buying more gold than ever before. The landscape for precious metals appears promising. While retail sentiment may waver on the mining equities, the broader market dynamics suggest that gold and silver could continue their ascent. As always, it's essential to stay informed and monitor these trends closely. Nothing in this video is financial advice. Please do your own due diligence. Thank you for watching, and until next time.